Learners, welcome to our session again, a continuation of what we've been doing in relation to what? In relation to taxation of employment income. In relation to taxation of employment income. So, in our class today, we are going to look at a concept of, remember this is still employment income. Employment income. Employment income. Very important concept, rarely it will miss in our exams. So, today, I want us to talk of tax credits that we are normally given when it comes to employment income. The tax credits ideally are factors or talk of amounts that will tend to reduce our taxable income. That is the tax payable. That will tend to reduce our tax payable. So, looking at tax credits, talk of tax credits. Very important concept that I want us to pay very keen attention on. So talk of our tax credits. As we mentioned, credits is amounts that will tend to assist us to reduce our tax payable. These credits will include the following. These credits, my good students, will include the following. Number one, you normally talk of a personal relief. As of now, it's upon us to, or in that case, you'll always be given in your paper. So like personal relief, as of now, or the one that you're going to be tested will be the one with 1404 per month. With that will translate to how much per year? 1408. That should give us a 1408 per month. With this will translate to 16,896 per annum. In that case, you'll always be given. And where will you be given? Look at this case here. You'll always be given that amount always. That's the beauty part with the examiner. If you're to talk of this, you'll find that personal relief, I'm given 1408 per month, 1,408 per month, and 16,896 per annum. So that is one of our tax credit that we'll be talking about. Tax credit. Number two, we will be talking of that it should be dividends. Talk of dividends, withholding tax on non-qualifying dividends. Withholding tax. On non-qualifying dividends. And we know very well that withholding tax here, because we had talked of this, is a total rate 15%. And that 15% is not a final tax. That's why you're giving it as what? As a tax credit. Number three, we'll be talking of insurance relief. Life insurance relief. And how will you determine that? You normally talk of 15% of our premiums, We compare that with 60,000. Whichever is lower is the one that I'm going to take as what? As our relief. So for tax credit in relation to employment income, I'll be looking at personal relief, which is 1,408 per month. translate it for the whole year, we're talking of 16,896 per annum. Withholding tax on unqualifying dividends. Remember, we mentioned that these are dividends that have a withholding tax of 15%. In this dividend, and this withholding tax is not a final tax. Life insurance relief, 15% of the premiums. We compare that with 60,000. Whichever is lower is the one that you're going to take. So this is a very important concept that at least before exams we should be able to understand. And it is at this point again that I'm going to look at the tax bracket, that is individual tax bracket. How are we supposed to tax a given income for an individual? The beauty part is that you'll always be given the tax bracket in your exams. But it is very important for us to understand how we can compute the tax payable by individual, even before we talk of these tax credits. So I'm going to share the latest, which was tested in for the one in November 19, and that is the one that still you are going to use. Talk of our rates, that is individual. So at times probably you can have that and you don't know how to use it, and you don't know how to use the individual tax bracket. How are you going to use that? That is what I want us to look at also in our class today. Before we go to the format of preparing the taxable income of an individual, I'll want us to look at the tax scale, the individual graduated scale rate. This is individual graduated scale rate. Individual graduated scale rate. Individual graduated scale rate. That is what I want us to talk about in this class also today. How will you use this scale? As you can see, I'm giving the monthly taxable pay, and we also have what? The annual taxable pay. Same concept will apply for both. So I'm going to use the one with an annual, the annual graduated scale. We are going to look at our annual graduated scale to help you understand how to use that, So if you are to talk of our annual taxable pay, this is what we have. I'm given a bracket 1 to 147,580, and I'm given that one is 10%. If you can see rate of tax, I'm given 10%. 147,581 to 286, 623, I'm given 15%. 286, 624 to 425, 666, I'm given 20%. 425, 667 to 564, 709, you are given 25%. Then excess over 564, 709, you're given 30%. So that is what we have. There, the annual. Now, looking at it, or how will you determine your taxable income? Take this case, assuming I'm having an individual who has a taxable I'm having an individual who has a taxable income of 1 million shillings, right? And you want to tax that person. How will you use this scale rate? That is very simple, because this is how you're going to work it out, the graduated scale rate. So the first thing that I'm going to do, looking at this case, this is how we are going to work it out. The first case I'm seeing I'm having, I'm going to take the 147 multiplied by our 10%. So that should give us 147, 580 by 10%. To give us a figure of how much? That should give us a figure of 14,758. We know very well that this graduated scale rate was adjusted. And we normally term it as corona rates, right? For corona rates, you find that in this case, we have only up to 25%, and up to 24,000 per month is not taxable. For the purpose of exams, we'll be using the one for 2019. We'll not be using the one that was adjusted just the other day. So, using this bracket, this is how we're working it out, 147,580 by 10%. The next bracket I'm seeing, it is at 15%. But the question is, how much are we going to subject it to 15%? This is how you are going to work it out, my good students. You are going to take the difference of the two, the difference of 286, you less 147,580. So I'll be taking 286, 623 minus 147,580 to give me a figure of 139,043. 139,043. Again, the other bracket of 20%, what will you be having? I'll be having the 425, 666, with less 286, 623. So I should be talking of 425, 666, with less 286, 623 to give us the same figure, 139,043. What about this scale? Same concept will apply. I'll be taking the 564,709, we deduct 425, 666. So 564,709, we deduct 425, 666. That should give us the same amount, 139,043. So in this case, we'll find that I'll be having the same amount. So therefore, I should be talking of 139,043 times 15%, 139,043 times 20%, 139,043 times 25%. These are the figures that you should be having. So therefore, 139,043 we multiply by 15%. I should be talking of how much? 2856.45. 139,043 to 139,043 we multiply by 20%. 27,808.60. The other one, 139,043 times 0.25. I should be talking of 34,760.75. So clearly, we can say that up to 564,709, what will be our tax? What will be our tax payable up to that point? The tax liability to the point I should be talking of 34,760.75. We add 27,808.60. We add 28,856.45, I'm going to add 14,758. 14,758. So you should be talking of 98,183.8. We should be talking of 98,183.8. So we know very well that up to 564,709, my taxable amount or the taxable value should be 98,183.8. In this event, we are talking of a person earning a figure of 1 million. So excess over 564,709 is what we are going to subject at how much? At 30%. In our case, it's how much? In our case, I'll be taking my 1 million, correct, with less 564,709. That should give us 435,291. That is the difference between the 1 million that we do have. We deduct the 564,709 to give us 435,291. Of course, we multiply that by 30%. That should give us how much? By 30% to give us 130,587.3. If I want to determine our taxable value up to this point, I should be talking of the 2 plus 98,183.8 to give us a figure of how much, my good students. I should be talking of 228,771.1 in the event that that person is earning how much? 1 million. In the event that this person is earning 1 million. So confidently, in other case, I can say that the first 564,709, the taxable amount on that is 98,183.8. This is the figure. Remember the one that we're determining it there. Of course, talk of excess. Excess, you can have the one that we've talked about, 1 million, with less 564,709. Of course, this one by 30% to give us the figure that we've determined there to be 130,587.3. So that as at the end of the day, I should be talking of 228,771.1. And this is where now the concept of tax credit will come in. This is where the concept of tax credit will come in. I'm going to take our personal relief. In the event that you had withholding tax relief, and in the event that I'm having what? Insurance relief. We know very well that relief in relation to individual, 16,896 per annum. Withholding tax relief, if we had the dividends that I was receiving, it could be having a withholding tax relief at that point. Insurance relief, we say at this point I'll be comparing the 15% of premium. 15% of premium. I'll be comparing 15% of premium. Remember what we've just done right now, right? We compare with 60,000. Whichever is lower is the one that I'll be taking it at that point. So that the final figure that I'll be having there, the final figure that I'll be having at this point, that is the one that we're going to term it as our tax payable or refundable. So we should be talking of our tax payable or refundable, the figure that we'll be having it at that point. So that is how we can use our individual graduated scale rate. Alternatively, if you want to be very quick in your exams, and at least you've watched this video of ours, alternatively, we can agree that, assuming that I still want to work it out using a simple manner, at this point, I'll do it like this. I know very well that the first bracket, I'm talking of 147,580, right? By what? 10%. I'll be taking the figure by 10% to give us the same figure of 14,758. We know up to this point we do have a common difference, right? We do have a common difference. And the common difference that we do have here is what? The common difference that we do have here is 139,043. That's the common difference that we do have. I'm going to sum up this percentage. 15 plus 20% plus 25%. That should give us 60%. So talk of 139, 043 by 60%. That should give us how much? 83, 425.8. Then you just sum it up. Plus 14, 758 to give us how much? 98, 183.8. Same figure you're arriving at that point. Then again, now you take your excess. Again, you take your excess, which is of course 1 million, of course minus the figure that we do have, the 564,709, 564,709. You multiply by the 30% to give you the same figure of 130, 587.3. And the same will have arrived at our figure there. The same will have arrived at our 228,771.1. Imagine as simple as that. That's the beauty part with tax, and if you've gotten the concept correct, Now, that is how you can use your graduated scale rate. That is how you can use your graduated scale rate. That's how you can use your graduated scale rate. Now, after you've looked at all these concepts, the final part that we should be looking at is the format of preparing taxable income under employment. So, allow me now to look at the format here. Allow us to talk of the format. Here. So, in this case, I'm going to erase this one. I'm going to erase this because right now we are very good on that. So, allow me to erase here. Now, looking at this format will always guide us. At any given point, I'll be talking of employment income. Always try to recall this format. It is very important. And it is a very simple format, which you'll find that's how you normally say that tax is very sweet. So long as you have the concept right, you'll find that things will just be flowing. And the beauty part of it is that employment income will never miss in our exams. So it is very important, even as you are studying this, just laugh, enjoy your studying. You'll find that things will be very, very simple. So on this we can talk of the format of presentation. Looking at our format of presentation. These are formats, right? This format will always apply in any question of employment income that you'll be doing. So our format will be like this. Assuming I'm taking this person, we can term the person as talk of, you can take any name, Masharia, talk of Gladys, talk of Juguna. So maybe I'm having say Lydia, 2019 computation, Lydia 2019 computation of employment income. So this is what you are going to do. My good student. This is what you are going to do. Lydia 2019 computation of employment income. So we are going to start assuming our figures, of course, are in Kenyan shillings. We have our figures in Kenyan shillings here. Okay. So we're going to start with our basic salary. Assuming I'm having our figure there. Okay? And an area that you should be very keen with whenever you are dealing with this concept is you can be told that you have this concept, basic salary. Maybe you are given, say, like 2 million. Then into bracket you can be told that net of pay, or pay deducted. On the other case, you can be given basic salary, 2 million, pay deducted, say like here is say like 100,000, right? Then another scenario, you can be given basic salary, then you're just told pay 100,000. What's the difference between the two? It will be very important for you to identify this. When I'm told that our basic salary is 2 million, then pay was deducted 100,000. The basic salary that I'm going to put here, it should be inclusive of pay, meaning that in this scenario, I'm going to take 2 million, we add 100,000, 12, 2.1. In this other scenario, basic salary pay 100,000, I'll just be taking how much? 2 million. So it's very important for you to understand that. So we have our basic salary there. Then of course I'm going to add the benefits. We are going to add our benefits here. We are going to add our benefits. Such as what? Car benefit. We say that we'll be comparing our CC rating and 2% per month. 2% per month on cost. Whichever is higher here is the one that you are going to take as our benefit at that point. And the CC rating, where will you get the CC rating? Look at this case. The CC rating, this is where we are going to get our CC rating. You'll always be given, like in our case, see prescribed benefits of motor vehicle provided by employer. So I'm having our CC rating. So assuming I'm given a motor vehicle with a CC rating of say like 2,000 or say like 2,100, you'll find that in such a case, my 2,100 will fall under this case, whereby I'm having the case of 2,001 to 3,000. So it will fall here, meaning that our benefit, I should be talking of 103,200 if it is on a per annum basis. Okay? So that is our CC rating beyond that you're talking about. So I'll be comparing the 2% of the cost, which I believe you had looked at that earlier on. Then talk of what? Furniture. Furniture, we said I'll be talking of 1% on cost. 1% of cost of the furniture. Cost of furniture. Having our benefit there. Then we can talk of the one that we had talked, assuming I'm having telephone. 30% of telephone bill. We have it there. As simple as that. Just flowing, it's just flowing, it's just flowing. Talk of per diem. Excess of 2,000 is what I'm going to take as our taxable benefit. Talk of what? Maybe insurance premiums paid by the employer. Insurance premiums paid by the employer. Paid by employer. Paid by employer. Paid by employer. I'm having our figure there. All these notes we had mentioned them when you are handling this. That's the beauty part of it, right? Talk of another benefit, maybe you can talk of. Maybe I'm talking of bonus paid by the employer. School fees debited in the books of, if it was debited in the books of the employer, debited in the books of employer, debited in the books of employer. medical benefit, medical benefit. If this is what? Discriminatory. If this is discriminatory, meaning that it was only provided to a specific class of employees. It was only provided to a specific class of employees. It was only provided to a specific class of employees. And be having it at that point. Servants. And be having it at that point. Okay. Now, final part, determining if I'm dealing with a non-whole-time service director or rather whole-time service director, housing benefit. Housing benefit. Housing benefit. How will you determine a housing benefit? Housing benefit we mentioned, I'll be talking of our total employment, total income, meaning that I should be talking of, assuming this one is our A, summation of all this, okay? Summation of all that. Summation of all that, I'll be taking now 15% of employment income, 15% of employment income. We take market rental value, market rental value, okay? Whichever is higher here, I'm going to less on contribution, less on contribution, less on contribution, with less on contribution. So the higher here minus on contribution, that is what will give us what? Our employment income, or not employment income, but talk of what? Our housing benefit, talk of our housing benefit, talk of our housing benefit. So that the moment we do have that case, we'll be able to determine now, talk of what? Our total employment income. This is employment income. And be able to determine our total employment income, of course, plus our benefits. Then we less what? We less contributions. We less contributions here. Deducting these contributions, these will include the following. Maybe I'm talking of mortgage. Interest. Mortgage interest, you know very well that this amount was adjusted. So I'll be comparing our set limit, which as at now is 300,000. I know most of the books have not adjusted that one yet. They are still sticking with what? 150,000, which is not correct. I'm going to compare with our actual amount. So whichever is lower there is the one I'm going to take it here. Talk of aspect of maybe I'm talking of a pension contribution to a registered scheme. Pension contribution. For pension contribution, I'm talking of our set limit, which in this case is 240,000. We are going to compare with our actual. Whichever is lower is the one I'm going to take it here. HOSP, Home Ownership Savings Plan. HOSP. I'm going to compare with our set limit, which is currently, it is 96,000. Also, I know most of the books have not updated that one. So you're supposed to use 96,000. That is from 2019. We have it there. We'll be taking the lower of the two. We have it there. So all these contributions, we are going to do what we are going to deduct. So that the figure that I should be having here, I should be talking of what? Taxable employment income. Taxable employment income. Taxable employment income. Taxable employment income. What if I had other incomes? Assuming I had other incomes, I can add our other incomes here. Other such as what? Rental income, for example. Net rental income, net of all your expenses. Dividends income. And in this case, you're talking of non-qualifying dividends. You're talking of non-qualifying dividends. You're talking of non-qualifying dividends. I should be having it there. And of course, maybe I had other businesses elsewhere. We'll be taking our incomes there. So that in this event, determining our total taxable income, 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 I should be having the figure that we do have here, assuming this one is A, we add these other incomes here. So that should give us our total taxable income. Now, I believe when you started this class, we had looked at the graduated scale rate. It is this figure now that you're going to subject it to our graduated scale rate. It is this figure that you are going to subject it to our graduated scale rate. And in that case, after you determine your income, amongst the items that you'll be deducting here will include the following. The tax credits that we mentioned, withholding tax, if you'll be having it at this point, personal relief, and also allowed to deduct the component of payee. Because remember, at this point, we have this figure is inclusive of what? It is inclusive of payee. So you also be required to deduct what? To deduct your payee. So after noting this one, this should give us our total taxable income. This should give us our total taxable income, which it has catered for employment and top of what? Other incomes. As simple as that. And this is our formula that we'll always be using. At any given point, we are handling employment income. At any given point, you are handling employment income. So to this point, my good students, I want you to join me in the next session where we are going to handle a full question. So for those who are watching us on Facebook right now, if you haven't downloaded for M-Darasa phone application, go to Play Store, download M-Darasa, search M-Darasa, is the only M-Darasa on Play Store, download, create account. If you want to use your computer or laptop, you can just go to web.mdarasa.co.ke. You can log into web.mdarasa.co.ke. For those probably who are watching us on YouTube, for those who are watching us on Facebook, for those probably watching us on other medias. So if you're using your computer, just log into web.mdarasa.co.ke, sign up. If you want to use your phone, go to Play Store, download M-Darasa, and you'll be having a lot of these beautiful videos, which will open your mind wide and also very simple to understand all of these concepts. So to this juncture, my good students, I want you to join me in the next session where we are going to handle a full question of employment income. Thank you so much, and let us meet in the next